stock market strategy video for Thursday, April 7th. Crazy little day yesterday. Actually, believe it or not, we've had no expansion of price in the last couple of days. This week has been kind of quiet and subdued, but I do think that volatility, as you can see, is starting to pick up now. We're looking at VIX. We're looking at certain indicators that are pointing to the downside, and that I've been saying that the next big move is going to be to the downside. We are down this morning about 11 and a half handles, but I have a funny feeling that it looks like the market may want to push up one more time. We're coming into options monthly expiration, where I'd like to see a low in place, and then the markets kind of rally, and then I think that's pretty much it. I think we put some sort of a top in the next couple of weeks. Again, the analysis changes very quickly, especially when you have fast-moving markets now. So I just want you to understand that. Please keep that in mind, okay? We're looking at some sort of a low today, tomorrow, and then we're looking at a bullish bias for next week. Generally is bullish on monthly options expiration. And then I think that pretty much would solidify it. But again, we need price to tell us that we're indeed now headed lower again after next week is over. So in the next couple of weeks, I'm looking for a little bit of a pause, and then we're going to start to see if this market pulls back a little bit. So looking for a bottom sometime today, tomorrow, and I'm looking for a bullish bias going into next week. Okay, now that could be chop and still end up the week bullish. So again, keep that in mind. All right, so let's talk about. You know that I'm eventually right now I'm short-term bearish on gold, long-term bullish on gold and the metals. But at the moment, gold is being driven by the dollar, the DX, or the UUP ETF. You can see we're at big support here. The dollar broke down this morning early and broke these levels. And usually what usually happens, as you can see, we break and then we immediately go right back up again. We break or hold and go right back up again. And that's what's happening right now. The dollar recovered its losses, and now gold popped pretty much higher, and now it's starting to give back a little bit of its gains. Okay, so keep an eye on the dollar if you guys are trading the metals. You can see the GLD. See, I mentioned a couple of things here. It's starting to get a little crazy. You know, we have that head and shoulders pattern here on the left, right? Okay, so that's a clearly identifiable, beautiful head and shoulders, and obviously that neckline is that 50-day moving average here. Or now we can do it this way, right? We can even say, could this be? And let me just get that drawing. Could this be a bull flag? I mean, it really could, right? I mean, just clearly. So we got two different patterns. One's going to have to break. If it is a bull flag and it does hold here, that what's going to be the next target? It's going to be that 50-day moving average, and then, of course, the bottom of that flag. And if that breaks, then I think that you're going to have some big downside pressure in gold. So a little bit of a mixed bag. I'm really going to call this still a head and shoulders. I think it's pretty pronounced. I like the way it looks, and you know, I'm gonna keep it that way as a head and shoulders pattern in gold and a GLD. Okay, it's clearly identifiable in the GC contract as well. All right, spiders. We broke back out of this downtrend line, which is great. We had a pop yesterday. We closed just at the high from the previous day, so we've really been doing nothing. If you could see here. From Friday's high to the low, we're basically in a range all since Friday. So we need to really break out of here. And when we get an expansion of volatility start to increase, you know, you're going to vacate these areas here quite quickly. So I do think that something is brewing, and I think something pretty big is going to happen. And obviously that's going to affect gold, oil, crude, all precious metals, grains, and of course equity markets. So keep an eye on this here, and I think here that if we lose that 20, we'll get to that big horizontal support area. Okay, so just keep that in mind. But you can see how our momentum is really waning. So even if we get, you can see that we're starting to roll down here. We're starting to cross over while we have markets moving up. So we have negative divergence in place. You can see here, right? We have negative divergence as indicators rolling over and prices starting to break out higher. So we'll see if it holds this low today, tomorrow, and we get a little bullish bias. We'll probably keep in the range or maybe kind of tick a little higher, and then I think that would be pretty much it. Again, looking at all of these longs that are still kind of caught from November, December. IWM, all right, Russell 2000 ETF, again, still below the 200, coincides nicely with this big, heavy band of resistance. Again, a lot of supply back up in here. You can see that. And it needs to really get out of this area and then get above the downtrend line. So there's a lot of work that Russell needs to do in order for it to really break out and start to excel higher. I don't think that's the case. I think it'll try to break out and then start to fall back down again, making lower lows and lower highs. Again, I'm looking for a little bit of a pop and then a drop. Okay, and that's going to be in the next couple of weeks, guys. All right, let's take a look at the transports. Transports, our leader. As you know, Russell was our secondary leader. Just tapped that, just under that 50-day moving average. So we'll see, guys. We'll see if this is going to hold, because if this does not hold, this will probably bring down and drag the rest of the markets with it, the transports, okay? Here's our daily diamonds. And again, holding well of this bearish rising wedge, and only bearish if it breaks a lower trend line here. So if it does break below, that 20 will be your first area of support, and then, of course, the 200, which coincides nicely coming underneath that 50-day moving average, and, of course, this horizontal area of support of 170, call it 171. Okay, so those are your two areas that you need to look for the diamonds. And then lastly, the Qs, again, a nice big bearish rising wedge, only bearish if it breaks, but that 20 and that 200 is right underneath it. So we got a little bit of support from 106 and a quarter to 107.90, 106 and a quarter to 108, let's call it, all right? About $1.90, $2 right up in this area here. And you can see what's happening, right? Price is moving up, and what's happening with our momentum indicators, RSI starting to break down here. You can see that. So we have negative divergence forming in our indicators while price is moving up, okay? So just keep that in mind, guys, while you're trading. Hope it helps everybody. Have a great day. Use your stops, because volatility is starting to pick up here. We should get a really big move in the next few days. Have a great day, everybody.